thank you very much to those of you who have joined the call. My name is John Fellows, and I am the Senior Manager for Digital and Communications for the Scottish Charity Regulator, Oscar, and I am delighted to welcome 255 and counting of you today, following the publication of the Charities Statement of Recommended Practice, SORP, which was published on the 31st of October this year. Today, we have representatives from all the charities SORP making bodies and the Financial Reporting Council to talk to us about the process that went behind developing the new SORP and the key changes that it contains. So we want to help you prepare for the practical implementation of the new SORP in the weeks and months ahead. So with that in mind, I'd like to briefly introduce our speakers. We have Rossa Keown from the Charity Commission for Northern Ireland, Laura Anderson from the Scottish Charity Regulator, Oscar, Amy Woods from the Charity Commission for England and Wales, and Stephen Maloney from the Financial Reporting Council. Rossa, Laura and Amy are the joint chairs of the SORP committee and key people from each charity regulator that makes up the SORP making body. Stephen is a special guest today as a Senior Project Director with the FRC, who has, along with his colleagues, worked with the SORP making body throughout the development process. We also have members of staff from the other bodies working in the background, so Deirdre Dowd and Gillian MacDonald and others who are here to help run the event and will help answer your questions. In advance of the webinar, when you signed up, we gave everyone an opportunity to ask some questions in advance. What we want to do today is we'll do a presentation and then we'll do a Q&A, and we'll use some of the questions that you've asked that we think will explain things, or will answer questions in a way that I think will explain the SORP to as many people as we can. We'll try and get through as many of them as we can today. And if we can't, I'm not sure we'll get through them all. If we don't, then make sure you sign up for, or you should receive automatically, because you have signed up, a follow-up email from us with some of the answers to those questions too. I know that Oscar has a mailing list or a newsletter for charities, the Oscar Reporter. You can sign up to that on our website. And I know that the Charity Commission for England and Wales and for Northern Ireland will have similar things to do too. So I definitely recommend that you sign up to these things so you can receive proactive information from us when we have things to tell you or things change. Some of the questions we've received are quite specific and quite detailed about individual charity circumstances. We'll try and steer away from those questions today and not give out individual advice on this call, but obviously the appropriate regulator will be in a better place to answer may be in a better place to answer some of those specific questions. So if we don't answer your question today, maybe just we don't have enough time, or it might not be appropriate to discuss in this content. I hope you understand that. So if you have any questions, they can be asked by going to the Q&A section at the top of your screen and putting them in there, and we'll try and answer them by text, and then we'll come to them at the end. If there are, I'm looking at our speakers now, I think I've got through that part okay. So what I'll do is I'll hand it over to our experts. So to start us off today, I'll hand over to Rossa in just a second. I know that our running order will be Rossa, then Stephen, back to Rossa for a couple of slides, Laura, and then Amy. And then I'll come back in after the presentation and run the Q&A. So without any further ado, I'll hand over to Rossa Keown from the Charity Commission for Northern Ireland.
Brilliant. Thank you, John. Very, very much appreciated. Very kind of you to say that we're the experts here. We do really appreciate that. Just wait for slides to come up and then we can get cracking on. But first and foremost, I'm really delighted to welcome you all here this afternoon to this launch webinar for the new Charity SORP 2026. I'm not going to go over it again, but myself, Laura and Amy, we're the joint chairs of the SORP making body, and we really want to extend a warm welcome to everyone here on what is a very cold day. But I'd also like to say a sincere thank you to everyone who has contributed to the development of the SORP in some way or another up until this point. So the SORP development has been a long time in the making, and as joint chairs, myself, Laura and Amy, are delighted to unveil the new SORP to you all today. It's great to see so many attendees, 350, over 350 at the minute, and to be able to take this opportunity really to give an overview of what is new in the SORP. I'm also going to extend a warm welcome to Stephen Maloney, who is from the FRC, and he's going to give an overview of the FRC's role in standard setting and SORP development. Move on to the next slide, please. So as part of today's session, myself and the other joint chairs are going to provide some insight on what the reasons are behind the SORP changing, why does it matter, and also going to touch on who does it impact, and what are the key changes resulting from the SORP development work, and what does all this mean for your charity specifically, and finally, what steps should you and your charity be taking now to be prepared for the new SORP's introduction. Next slide. So in terms of a bit of scene setting and an overview for why changes are needed, so the SORP is based on UK accounting standards that are set by the FRC. So the financial reporting standard FRS 102 is the accounting standard that the charity SORP is then based on. So periodically the FRC review and update accounting standards, and in recent years the FRC have updated FRS 102, which meant that the charity SORP also required updating, as it has to be consistent with those accounting standards. So when one changes, the other follows. The effective date of the new FRS 102 and the SORP is the 1st of January 2026, so the new SORP will apply to accounting periods starting on or after that date. So I'm going to hand over to Stephen now from the FRC to give an overview of the FRC's role in this work. Stephen, over to you.
Thanks very much, Rossa. So I'm here as a guest slot for just a couple of minutes just to provide some further clarification and reinforcement about the role of the FRC and the role of FRS 102 as they relate to the SORP. So firstly, who is the FRC? What is our purpose? The purpose of the FRC is to serve the public interest and support UK economic growth by upholding high standards of corporate governance, corporate reporting, audit and actuarial work. The important part of that from my perspective is that we are a prescribed body for setting accounting standards in the UK and the Republic of Ireland. And our main standard, as we refer to it, is FRS 102, which is a general purpose financial reporting standard that's available to a very wide range of entities in the UK and Ireland. Entities who are required or choose to produce accruals-based accounts that are intended to give a true and fair view, and who aren't required or choose to apply international financial reporting standards. With that being the case, there are some 1.5 million or more entities that are applying FRS 102 every year to prepare their accounts, which of course includes quite a number of charities. But important to be aware that although the FRC sets the requirements in FRS 102, the FRC doesn't set the requirements for who has to apply FRS 102. So it's not us telling charities that they have to apply FRS 102, but it is us saying what FRS 102 requires. The other aspect of the FRC's role that's particularly relevant here is that we set and maintain the SORP policy. So statements of recommended practice, as you may all well know, are sector-driven recommendations on financial reporting for specialised industries or sectors, such as charities, and those recommendations supplement FRS 102. That means that a SORP can't contradict FRS 102, it can't disapply a requirement from FRS 102, but it can provide guidance about what FRS 102 requires and how to apply it in the sector. It can limit accounting policy options, for example, for consistency within a sector. It can override exemptions that would otherwise be available under the standard, and it can add additional disclosure requirements that are seen as required in the sector. So a SORP-making body has to be recognised by the FRC for this purpose and has to follow the FRC's SORP policy. And the FRC is afforded observer status over the SORP-making body's activities. Next slide. So when this comes to the actual process for SORP development, a few words about how this interacts with elements of the SORP policy and where the FRC has a touch. So during the development of a SORP, including the updating of an existing SORP, a SORP making body seeks the effective participation of a wide range of stakeholders. New and updated SORPs are, of course, subject to public consultation, proactively and publicly seeking the views and then considering the views of stakeholders. And before it can be published, a SORP has to include a statement from the FRC. And the FRC statement confirms that the SORP doesn't appear to contain fundamental points of principle that are unacceptable in the context of current financial reporting practice, that the SORP doesn't appear to conflict with an FRC standard, and indeed that the SORP doesn't undermine any of the FRC's broader objectives. And the FRC only issues that statement if it's satisfied that the SORP has been developed in accordance with the SORP policy. So when you see the new SORP, a few pages in at the front of the SORP, you'll find the FRC statement saying those things. Sometimes a SORP making body also likes to, or finds a reason to issue additional guidance on the application of a SORP, so outside the SORP itself, but associated with the SORP. And the SORP policy allows for such guidance to be published in certain circumstances. That requires the FRC's consent, but doesn't require the FRC's formal review or the issue of a statement. Next slide, please. So this is the last one from me, just to say a bit more about FRS 102 and how it's changed, which is one of the prompts for the new version of the SORP that we now see. So the FRC reviews approximately every 5 years to consider updates and improvements that might be required. This is partly because we seek IFRS-based solutions wherever possible, and of course IFRS accounting standards. So with a period of stability in between, we try to conduct those reviews every 5 years or so. This was the second periodic review of FRS 102, and we proposed significant changes for public consultation, our own public consultation, in December of 2022. The consultation was called FRED 82, and the amendments were finalised in March of 2024. Why is that relevant to the charity SORP? Well, there are two main reasons. When FRS 102 changes, a SORP may need to be amended. Firstly, because, as I've said, a SORP cannot contradict FRS 102, and so there may be things that need to change as a result of FRS 102 changing. And perhaps more importantly, guidance on how to apply new or amended FRS 102 requirements. Those requirements, of course, will apply to them, and so the SORP might need to step in to help preparers to understand how. Briefly, what were the main changes in that second periodic review? Those amendments, as I said, were published in March of 2024, and most of them are effective from the 1st of January 26. The FRC modernised the accounting requirements for revenue from exchange transactions, which we call revenue from contracts with customers, and the accounting requirements for leases, the principles of current IFRS accounting standards. Those are IFRSs 15 and 16, if you're familiar with those numbers, but with simplifications to make them proportionate for the population 102. And as well as those two headline changes, there were other incremental improvements and clarifications throughout FRS 102, which in general were all intended to aid consistent application of those requirements by the whole range of entities applying FRS 102. That's everything from me. Thank you. And I'll hand back to Rossa.
Brilliant. Thank you so much, Stephen. That's really helpful context to show the work of the FRC and their role in the SORP development. I would also like to say a really special thank you to Stephen and all his FRC colleagues for their support throughout the SORP development process, as it was greatly appreciated by us all as joint chairs. But I suppose the question is, what does this all mean in practice for charities? So in order to produce true and fair accounts, the new accounting standard must be complied with. As I've mentioned, the SORP must be consistent with FRS 102, and therefore the SORP needed updating. So following on from the FRC publishing the revised standard in March 2024, Stephen has outlined, the SORP making body updated the SORP, and then an exposure draft was approved for consultation in March 2025. So the public consultation on this then ran for 12 weeks from March to June 2025, attracting over 140 responses. And again, a big thank you to any individuals that are attending today who may have participated in that consultation. So the feedback from the consultation process, along with the advice from the SORP Advisory Committee, informed the final version of the SORP, which was published on the 31st of October. So next slide, please. I must also touch on the fact that the SORP development process was not only focused on the FRS 102 changes. So following a governance review in 2019-20, a new approach was initiated, and this approach had greater engagement at its heart. So to support the SORP making body and its advisory SORP committee and its work, Volunteer engagement partners were recruited to help identify key areas of the SORP which needed closer examination. The engagement strands then began their work back in 2020, and ultimately this work culminated with the SORP making body identifying 15 key topic areas which would be looked at as areas of improvement. So in collaboration with the SORP committee, the SORP making body took forward these topics, which is ultimately feeding into the changes that you're now seeing in the new SORP. Another element of this process was the development of new aims and principles to help guide the drafting of the format and the content of the SORP. So the role of the SORP is to provide a framework for applying accounting standards to the charity sector and to promote high quality financial reporting by charities. And it was hoped that this would be achieved with these new principles in mind, trying to assist both the users and the preparers of charity accounts as much as possible. So as you can see, the SORP development has been a monumental task, which is undertaking a full-scale review of all the modules in the SORP to ensure that as best we can, the feedback from engagement partners has been listened to, but to also ensure the drafting aims and principles have been followed and ensure consistency with the accounting standards. Next slide. So for many, the SORP can be a daunting beast to tackle, but it is an extremely important part of the charity accounting framework. But why does it matter? Some might say, firstly and most importantly, it's a legal requirement under the regulations of the 3 UK charity regulators. Under each jurisdiction, there's a legal requirement to prepare accruals accounts when you exceed the £250,000 income threshold, or if you're a charitable company. So these accruals accounts must be prepared in accordance with the charity SORP. So as trustees of a charity, you're responsible for preparing accounts in accordance with the relevant regulations. Secondly, the SORP then encourages good financial and narrative reporting, which contributes to good governance and ultimately allows the charity to support its beneficiaries for as long as needed. So charities should really be aware of how their charity is performing and how they can assist their beneficiaries, and the SORP can help in this regard. And finally, it promotes public trust and confidence in the charity sector by providing transparency and accountability on how charity funds are used, which in turn plays a key part in maintaining high levels of trust in what charities are doing. Next slide, please. So in terms of the key changes to the SORP, there's 6 key areas that we're keen to highlight to you all today. So firstly, we have tiering, which is the introduction of the new tiering structure within the SORP. The trustees' annual report. We also want to look at the changes to the cash flow statement requirements. There's a new module for lease accounting. The income recognition module has been updated, and also the social investments module has been updated. So these are the key areas that we want to focus on today. On the next slide, please. I'm going to touch on the first of those. So tiering is the first major area of change. The current SORP has 2 separate reporting thresholds, so charities under 500k and then everybody else. SORP 2026 is going to see a move to a 3-tier model to replace the current tiers. So that 3-tier model will look like Tier 1 will have charities with a gross income of not more than 500,000. Tier 2 will be charities above the Tier 1 threshold, but not more than 15 million. And then Tier 3 will be charities above that Tier 2 threshold. So this new approach has been designed to allow greater proportionality in requirements where the SORP making body has the flexibility to do so, for example, in the trustees' annual report. So each module of the SORP starts by clearly explaining at the outset how the requirements apply to each tier for that module. Some modules are going to be applicable to all charities as the requirements stem from FRS 102. So the SORP does not necessarily have the flexibility to put tiering structures in place for those modules. As part of the consultation feedback and throughout the consultation process, there was varied feedback in relation to the new tiered approach. Overall, there was support for moving to a 3-tier model, but challenges for smaller charities continued to be highlighted. So there were different tiering suggestions were proposed. The SORP making body did consider these proposals, and although there were arguments for adjusting the tiers, the SORP making body concluded that this would not be the right choice at this time based on the information available. So after careful consideration, the SORP making bodies of the view that it is important to more fully understand the views held by both users of SORP but also users of charity annual reports and accounts to really determine if a change to the tiers is required. SORP making bodies there are fully committed to carrying out further work in this area following the publication of the SORP to help to understand the landscape properly to make a properly informed decision on the tiering model. But for now, the tiers are as set out in the new SORP and as I've just outlined. I'm now going to hand over to Laura, who's going to talk through some of the other changes. Laura, over to you.
Thanks very much. Good afternoon, everyone. It's really fantastic to see so many people have joined us for this webinar this afternoon. Thank you very much indeed for potentially, I guess, giving up some of your lunchtime to hear what we've got to say. So I'm going to look first at the Trustees' Annual Report. Now, this is an area where traditionally the SORP making body has a fair amount of flexibility to set requirements for charities. There are relatively few narrative reporting requirements that actually originate in accounting standards, but there are some narrative reporting requirements that are set out in accounting regulations for charities, and those form part of the requirements that are actually written into the SORP. Now, bearing all of that in mind, there are some key aspects of the new Trustees Annual Report module that we would like to highlight where there's been a refreshed approach taken, I guess. And this is particularly the case in terms of how module one being the Trustees Annual Report module, is actually now written in the SORP. Now, we recognise that for probably most other modules within the SORP that explain the accounting treatments for particular types of financial transactions, it might actually be quite challenging for charity trustees themselves to understand what needs to be done. The Trustees' Annual Report, however, is different, and it should be something that all trustees contribute to and actively take a hand in the preparation of. So with that in mind, Module 1 is written now to try to speak much more directly to charity trustees. In response to the topics that our engagement partners identified in the really early stages of this development process, we've now provided more guidance on reserves to help improve understanding of what reserves are and how the reserves figure actually links to the numbers in the accounts. We've updated the definition of reserves, and that takes into account also feedback that we received as part of the consultation process. The new definition is designed to make it easier for everyone to consistently and clearly understand how to calculate their reserves, and also to try and explain how the reserves figure should link to consideration around whether or not the charity is actually a going concern. And that, for many of you, will particularly, you'll recognise, be relevant in today's financial climate, given some of the challenges that we know charities are experiencing in that area. Linked to this is also the extension of the requirement for plans for the future to be explained in the Trustees' Annual Report. Now, that was previously only a requirement for charities with income in excess of £500,000, but now charities in Tier 1, so below that level as well, they're also required to now provide a summary of future plans. Now, critically, in terms of good governance, that should already be part of discussions that charity trustees are having around their board table, and it will be of interest to external stakeholders when they're making decisions maybe about whether they want to fund your charity, to donate to it, or perhaps whether they want to volunteer or engage with your charity as well. So it's expected that this information will have much wider benefit too. A few other changes I'll highlight here as well. Again, the engagement partners that we worked with identified a need for charities to explain much more about the work that they're doing and the outcomes of that work for beneficiaries. This will be regularly something, again, features in the discussions that charity trustees have around the table. So we do not anticipate that this requirement will be onerous. For charities in Tier 1, as a reminder, that's if your income is up to £500,000, these charities need to explain the main achievements in the year in their Trustees' Annual Report. And we've included prompt questions in Module 1 to help trustees really think about what they should include in that narrative, recognising often that where there are new requirements, sometimes it can be challenging to understand what's really being asked for. The prompt questions are designed to help you with that. At the heart of the requirement here, however, is the need to explain the difference the charity's activities have made to its beneficiaries. Now, trustees and those working within charities will know, in all likelihood, what difference they make to the lives of their beneficiaries, because that will be something that they're very alive to in understanding how the service or the activity that their charity provides affects those it's designed for. They will always be keen to understand how they can improve what is offered so that greater benefit is obtained. And often they'll be reporting to donors and funders about what they've achieved as a result of the resources that they've received. Charities obviously have an ongoing requirement to report on public benefit, so it's incumbent on trustees to understand what effect their activities are actually having on those that are designed to help and support. Fundamentally, that's what this is about here. Next, sustainability reporting. And again, this has been something that's been highlighted as part of the engagement process. Reporting on sustainability has only been mandated for the biggest charities, those in Tier 3, but it's also very much encouraged for charities in Tier 1 and 2 as well. Tier 3 charities are required to provide a summary of how the charity is responding to and managing environmental, governance, and social matters. The introduction of this requirement, I think, in the SORP recognises that the world around us has changed since the last SORP was written. Expectations and interests of stakeholders have changed, not just in relation to charities, but also more broadly. And that's what the SORP is seeking to do, to keep pace with modern society here. Finally, legacies. There are requirements for charities in Tiers 2 and 3 to explain more about how legacy income is included in the charity's accounts, given some of the complexities that exist around legacy recognition. Again, affected charities will understand this themselves. They will already be talking about this amongst themselves. So it's really a case of explaining it for others to understand and to help them understand what your charity's accounts actually mean, particularly perhaps where a legacy may be recognised in the accounts but has yet to actually be physically received. Next slide, thanks, Gillian. Second area I'd like to examine very briefly actually is the cash flow statement. Now, there's a key change here in respect of the need to prepare a cash flow statement that many, I'm sure, smaller organisations in particular will be really pleased to see. The current SORP requires charities with income over £500,000 to prepare a cash flow statement, and SORP 2026 raises that income level up to £15 million. A word of caution though, charities do need to continue to remember that where they're required to prepare a cash flow statement where they meet relevant criteria that's set out in FRS 102, now that includes looking at the number of employees you have and the assets of the charity, it is possible that a charity could still have income of less than £15 million, but be required to prepare a cash flow statement as a result of meeting other criteria. But the SORP making body has taken advantage of the flexibility that it has in this area. Next slide, thanks, Gillian. Let's move on briefly to look at lease accounting. This is a really key area of change in FRS 102, and as explained earlier on, the SORP can't change the requirements of FRS 102, but what it can do is to aid understanding of these requirements for charities, and that's what we've tried to do in the SORP. Particularly recognising that as these requirements are new, the transition to reporting in this area may present challenges for some charities. Now, this is why particularly the level of detail that we have provided in the new module on leasing, and that's module 10B in the SORP, is greater than in many other parts of the SORP, because we really want to support charities to understand the requirements and how they apply to the transactions or the arrangements that the charity has. Fundamentally, the key change to be aware of here is that all lease arrangements will now feature on the balance sheet, where the arrangement meets the definition of a lease within FRS 102, unless a recognition exemption applies to the arrangement and the charity chooses to take advantage of that exemption. The recognition exemptions cover short-term leases. Now, that's a lease that has a maximum term of 12 months, as well as leases of low-value assets, examples of which would include perhaps PCs and small items, maybe of office furniture or a telephone, for instance. The new SORP recognises that arrangements that many charities may have that are traditionally thought of and sometimes referred to as leases, they might not fit within the conventional description. In the charity sector, we often talk about peppercorn arrangements and peppercorn leases, and it's not uncommon for charities to pay less than a normal rental charge for the use of an asset in recognition of the fact that they are a charity. Now, while it isn't possible for the SORP to describe in detail how each different permutation of these arrangements should be accounted for and reported on, the SORP does explain a lot in terms of the principles and the requirements that are set out in FRS 102 in a way that hopefully charities will be able to understand and translate to look at their own arrangements and how they should account for them. One key addition to Module 10B since the consultation draft of the SORP is the inclusion of a flowchart And I would particularly highlight this because we think it is going to be really helpful for charities to navigate their way through Module 10B, and also the considerations that they need to have in this area, which we hope will be really beneficial in terms of practical application. Next slide. Thank you, Gillian. Final change I'd like to talk about is around the recognition of income, where again, we've got some changes to FRS 102 that have necessitated changes to the SORP, and particularly in relation to Module 5 of the SORP. Now, income that charities receive generally falls into one of two categories. It's either income from an exchange transaction, where the charity receives resources in exchange for providing something. Now, it's usually a service or an activity, or it will be income from a non-exchange transaction, such as a donation where funds are received by the charity, but not in return for the charity giving something to the donor. Module 5 of the SORP has now been split specifically to explain clearly how charities should deal with these two categories of income, because the rules are quite distinct in some areas. The key change to highlight here, however, is about income from exchange transactions and contracts that the charity has for the provision of goods or services from which it receives income as a result. Now, FRS 102 introduces what is called a 5-step model, and that needs to be followed to correctly account for such income. The underlying principle here is that income is recognised in the charity's accounts in line with when the charity transfers control of the good or service that it has promised to provide to the other party to the contract. Finally, just to highlight here, some further improvements have been made to the SORP to explain about the treatment of income from legacies. We know that this has often been an area of confusion, and the SORP making body have taken on board feedback and the practical issues that have been raised to us in trying to provide more guidance in this area. I'll now hand over to Amy to round off the presentation.
Thanks, Laura, and good afternoon, everybody. It's wonderful to have so many of you join the SORP launch webinar today. So I'm going to talk a little bit about some other changes that SORP 2026 has introduced, and I'm going to start off talking about social investments. So Module 21 of the SORP deals with social investments, and that was the same in the current SORP, with social investments being a SORP term that doesn't come from FRS 102. A key change for SORP 2026 in relation to social investments is that the SORP has retired the terms mixed motive and programme related investments. All social investments now being termed as social investments, and this change was made to align and to simplify with the requirements in the Charities Act in England and Wales. The SORP also now introduces a simpler reporting of gains and losses on social investments. And if you were familiar with the exposure draft of the SORP, you will note that the requirements in SORP 2026 are different to what we consulted on. And the feedback from the consultation very much helped to shape the final position of the SORP. Module 21 was restructured to align and reflect more closely with the requirements of FRS 102 as it relates to investments, for example, clarifying the position on concessionary loans. The module also helpfully signposts to other SORP modules that charities need to be aware of when accounting for their social investments. Charities should review the module and consider the transitional arrangements that are set out within the module. Next slide, please. So other changes throughout the SORP that we just wanted to highlight today. Module 4, which is the statement of financial activities. An example of natural classifications has been included. So there's an example SOFA in there, which received positive feedback, and hopefully that will be helpful to those charities eligible and who opt to prepare their accounts on a natural classification. Activity reporting is retained for charities above 500,000. So that is charities in Tier 2 and Tier 3. So that requirement remains the same. A new module, 10A, has been included to provide details on provisions, contingent liabilities and assets, all within one module. So hopefully that is a helpful change to SORP 2026. The total return requirements as set out in module 22 have been updated for the Charities Act changes, and there's some new disclosures that have been added to that module. That module, I must say, won't apply to all charities, and it is charities in England and Wales as well. So only consider that module if you are operating under total return. Module 2, which is the funds accounting module, has been updated to assist with governance and reporting in this area. And throughout the SORP making body has really been, the approach has been to simplify language where possible and to aid application with examples to support users in how to apply the accounting in the charity specific scenarios. I would also just note that the modular SORP has been retained and the SORP site will be updated shortly so that users can access SORP modules on a module by module basis. At the moment, it's just the full download of the SORP, but we will update shortly with a module by module basis SORP. The basis of conclusions is a helpful place to go to find out more about the changes. So I'd encourage you all to read this appendix, which is Appendix 4 at the back of the SORP. And also there is the explanation of changes document, which it's a high level document, which is available on the SORP site. Next slide, please. So making the transition to SORP 2026 and in considering the arrangements, preparers will need to consider the detail that is set out in the scope and application module. Paragraphs 22 to 25 are key paragraphs, but there's also some detail throughout the SORP modules, for example, in relation to module 21 on social investments, which I've just mentioned. Preparers will also need to refer to section 1 of FRS 102 for transitional arrangements set out there on the new arrangements or amended requirements. And FRS 102 section 1 is also signposted from the scope and application section of the SORP. In readiness for the SORP 2026, charities, as we've discussed today, the new tiered approach, charities should look to see what tier they are in and what requirements are applicable to their particular situation. Each module does clearly set out where tiering applies, and not every module will apply to all charities, although some may apply to all. So please do familiarise yourself with the requirements, because this is a key understanding of what tier you're in and what modules apply to the specific transactions and agreements for your charity is really important. Next slide, please. So we've talked about today the effective date, that is the 1st of January, so that's for accounting period starting on or after the 1st of January 2026. Early adoption is permitted where the respective regulations allow, and the detail for this, as I've said, is set out in the scope and application module. There's lots of information on the SORP site, so please do take time to read the SORP and the information available. Again, I can't stress enough, scope and application module is a must read. It covers a lot of the basic information and should provide you with the knowledge to navigate the SORP and also the basis for conclusions. So these are a really good starting point. Yes, we know the SORP is a long document, but in addition to sector-specific requirements, it does provide an interpretation of FRS 102 in the context of charities. And so that's why there's extra detail is provided in the SORP. There's been a question in the chat which I've replied to. The SORP will not be published as a hard copy and will only be downloaded, available to download on the SORP site. In terms of leasing and income recognition changes, the message is clear and is consistent with what has been the messaging since FRS 102 was published last year, and that is start to consider your agreements and whether the requirements of 102 apply to your charity and understand how to apply them. The SORP making body will be issuing a help sheet on leasing, and we will be considering what other resources may be helpful to support implementation as we gather a bit more information about any particular issues or concerns. The FRC have some really helpful information sheets. Sorry, not helpful information. There's a core fact sheets. And you may not be aware of those. For example, there's a fact sheet on lease accounting and one on revenue recognition. I think they're fact sheet 10 and 11. So please seek those out. And also the FRC published an explainer document in January 2025, which sets out some of the key considerations for charities. Whilst it is true that it will be some time before charities will be preparing accounts on the new set SORP, unless, of course, they choose to early adopt, it is advisable for charities to think now about whether different accounting records should be maintained to facilitate the account preparation under the new SORP, and we encourage charities to do this. Seek advice if you need to. If you don't have in-house technical support, you may need to speak to your independent examiner, auditor, or accountant. Another thing to flag is that charities should consider whether it's appropriate and helpful to mention forthcoming likely changes in the trustees' annual report under the current SORP. For example, if charities are expecting a big shift in their balance sheet position, that might be something that would be helpful to include in the report under the future plans. This may be helpful information for funders and stakeholders. In addition, having active discussions, which colleagues have referred to today, about the changes early doors with your trustee board will ultimately assist with the stewardship of your charity. Charities and the profession should look out for training sessions and webinars provided by professional and stakeholder bodies. And it is really positive to see the activity in this space and how professional bodies and sector bodies are engaging their members to build capability and support material. The SORP making body is really keen to work collaboratively with the profession and continue to do so with sector bodies also to understand implementation issues and particular concerns. And we are grateful to the bodies for the vital role that they play in educating their members on implementation. So a call to action: familiarise yourself with the SORP, identify the tier you are in and your requirements, noting that many requirements come from FRS 102, save for the cash flow, so they will be applicable to all charities. And start to think about whether you need to collect different information from the 1st of January 2026 to aid with the SORP 2026 accounts. Thank you. And I think we have time now for some questions, John.
I think we do. Thank you very much, Amy, for that, and for Rosa and Laura too. I have been to and chaired quite a few webinars in my professional time, but speaking for 40 minutes and having more attendees at the end than the beginning is quite a triumph. So thank you very much, and thank you to everyone who's attended, who phoned their friends and asked them to join while we're going through it. So for the last 17 minutes or so, we're going to try and go through as many of the questions we've received either in advance or in the chat as we can. If you want to ask a question, click on the Q&A tab at the top and ask in there, and some of the experts are already going through those. There's also a link to the SORP website where you can find some of the more information, and we'll talk a little bit about how that's going to be updated in a second. And I've also just posted a link to how you can sign up for future updates from each of the 3 charity regulators that are here today. Not just about SORP, but about all the matters relating to your charity. So to start off, the first question I have is for you, Rosa. You talked a little bit this in your presentation already, but the question was that the new SORP states that the SORP making body is committed to conducting focused consultation work in this area following publication of the SORP. This will allow greater exploration of the issues and needs which should be taken into account in making any further choices about the tiering model set out in the SORP. Is there more information you can give us, Rosa, about how and when this work will take place?
Thanks, John. That's actually a really important question, and a couple of reasons. Firstly, this is referencing comments made by the SORP making body in the basis for conclusions, and Amy touched on this. It's really useful and beneficial to go to the basis for conclusions at Appendix 4, as it explains the key changes throughout the document, and it does give some context to some of the decisions that the SORP making body has made. So really positive to see that somebody has taken the time to read that. But secondly, it flags up one of the key areas of work for the SORP making body that we're well aware of, and so all this additional work in trying to determine what change is required to the tiering thresholds, if a change is required at all. But in terms of the how and the specific questions being asked, in terms of the how, the SORP making body is really committed to taking forward a short consultation, which will be really focused specifically on the views of individuals and charities on the income thresholds themselves. So it won't be as onerous or as large as the consultation that happened earlier in the year. It will be very sharp and very focused. In terms of the when, I cannot give specific dates on that at this time. However, I will say that we are keen to get this completed as soon as possible, and we're currently working through the planning process of this work. But please be assured it's not something that SORP making body are looking to kick down the line, years down the line. It's something we're committed to doing as soon as is practicable, and we will be engaging and communicating with the sector whenever we're in a position to do so on that.
Smashing. Thank you very much for that as well. I know there's something feedback in the chat, but also in the questions we've got about the position of smaller charities. And so the second question I'm going to ask Rosa again is about that issue. Given changes in the audit thresholds and the evidence that led to the changes, why was it not deemed appropriate to increase the Tier 1 threshold from £500,000, especially when the philosophy of the SORP development was supposed to be think small first?
I take that on board completely. The philosophy was think small first, and throughout the development process, we have tried to be as proportionate in the way we have developed the SORP, so that is proportionate for smaller charities. Again, the SORP making body has been more than aware of the changes in the audit thresholds throughout the development process. And in fact, during the consultation feedback, reference was made to these changes and aligning the Tier 1 with audit thresholds. I suppose the difficulty here is that the audit thresholds are different across the UK jurisdictions, so trying to mirror these or align the Tier 1 threshold with these is actually quite difficult. But more broadly speaking, from the feedback that we got from the consultation, it was clear that people wanted to see a change or a movement in Tier 1, but the difficulty was the consensus of where that movement should be and what level it should be brought to. So I think on a total reflection, the SORP making body stepped away from that and listened to everything. I thought we came to the conclusion it was better to have a more fuller conversation with the sector and do that focused, targeted piece of work to really understand where the income levels needed to change, if in fact, like I say, they needed to change at all. So, like I say, we're committed to doing that piece of work, and hopefully, should we get the responses in that consultation that says there's a need for change, then that may come down the line.
Okay, thank you very much. So something that still committed to looking at in detail.
Absolutely.
The next question's for you, Laura, about small charities. The question is, how can small charities clearly understand what they need to do to comply with the new SORP?
Thanks, John. Yeah, and I've also seen a few other questions coming through in the live environment that sort of touch on this as well. So I think there's a couple of things to be clear about here. Firstly, there is obviously a receipts and payments regime that many small charities are able to make active use of, and which doesn't involve using or referring to or complying with the SORP. And I did see a specific question asking that, so let me just clarify that. If you're preparing R&P accounts, receipts and payments accounts, it means you do not have to look at or comply with the SORP, okay? Now, each part of the UK has an income threshold above which charities must prepare accounts in line with the SORP. For charitable companies below that income threshold, they also have to prepare their accounts in line with the SORP, regardless of the income level that they have. Where a charity has to follow the SORP in order to meet its relevant legal requirements, it needs to first identify the modules of the SORP that are relevant to the arrangements and the transactions that it has. Now, some modules of the SORP, and Amy touched upon this earlier, some modules of the SORP are applicable to all charities, such as the Trustees' Annual Report, Module 1, and the Statement of Financial Activities, for instance, Module 4. Others are only relevant where you have a particular type of transaction or you engage in a particular type of activity. An example of that would be Module 16, that deals with grant-making activities. Once the charity understands the modules that are relevant to it, it needs to read those modules to understand where there are different requirements depending on which tier the charity is in, 1, 2, or 3. For each module where there are different requirements depending on which tier the charity is in, the requirements for each tier are really clearly set out. So my advice would be understand the modules that are relevant to you, look to see if the arrangements are different depending on what tier you're in, and then focus very specifically, if you're a small charity in tier 1, what is relevant for you then in tier 1, and then try and distill the SORP down to what is really relevant and applicable for your charity.
Smashing. Thank you very much, Laura. Amy, coming to you next, we've had some questions about accounting software packages and digital filing for charities. Does the SORP-making body intend to work with others to ensure appropriate updates are made to software and digital filing so it's straightforward for charities?
Oh, okay, thanks, John. Good question. So firstly, the role of the SORP-making body is to develop and maintain the SORP to support the preparation of high-quality annual reports and accounts by charities. The SORP-making body, it's not our role really to ensure that commercial accounting providers are updating their packages for the new SORP. However, what I can confirm is that the Charity Commission for England and Wales has worked with the Financial Reporting Council to update the charities taxonomy. So the taxonomy, for those who do not know about this, that is the basis on which the digital filings are submitted, and software companies use that taxonomy to design their software to enable digital filing. This taxonomy has been updated for SORP 2026, and I believe the taxonomy was released this week. So please do look out on the FRC's website if you're interested in that taxonomy. Other information which I just thought it'd be helpful to share on the call, as it does relate to charitable companies, is that Companies House has developed a software lookup tool, and I'll pop the link in the chat in a moment. I'll look that out and pop it in before we finish, hopefully. And this is to help customers search the selection of software options available to find the right product to meet their needs for digital filing. Companies House continue to work with software companies to ensure that there is adequate coverage across the software market to cater for all account types, including charitable companies and including low-cost options. Please do keep an eye out on Companies House website. I'll put the link in, but follow them because it's a Companies House change in relation to software filings. But be assured the taxonomy has been updated to reflect the Charity SORP 2026. Thank you.
Thanks very much, Amy. I think that'd be reassuring to people to know that we're working to make sure that these changes are reflected across providers as well as
absolutely
to allow people to prepare as well as they can. And we've seen a few questions in the chat. I've got one more question for you though, Amy, in that there is I suppose there's a desire for the charity to see more guidance or updated guidance and help and support. Will the SORP-making body be producing further materials in addition to the official documents to help support charities through these changes over the next period?
Yeah, sure. Thank you. And I've spotted some of those questions in the chat. And indeed, we did hear some of this feedback through the consultation as well. So, the approach that we've taken to developing the SORP has been to focus on providing more explanations of the requirements, as well as more examples to aid understanding, as I explained, when I've done my presentation before. And that is one of the reasons why the SORP is a longer document than before. We want to encourage preparers of charity accounts to use the significant resource that is in the SORP. There are example tables, you've got example SOFA, an example balance sheet, funds notes. There is a lot of helpful, information within the SORP. And the scope and application and basis for conclusions. In case you missed, I've said that several times. These are key areas, of focus. Only by reading the relevant requirements, you can understand what your charity's transactions, how it all applies. That said, we do intend to prepare additional materials to support understanding of the new lease module, for example. That work is in hand. Timing, we hope to get that issued by the end of January. So there will be, supporting materials for lease accounting. And then, as I said before, going forward, we really want to work with professional bodies and sector bodies to understand the challenging areas and how we can help, in that space, and what additional material may be needed. But we're also conscious that professional bodies and, sector bodies will want to work in their own ways to support members, and we want to provide the freedom for them to do so in that space. So currently, plans to do a lease help sheet, and we will keep, a watching brief on any of the feedback we hear from implementation, but call to action is to read the SORP, and you may identify that you don't need, further help sheets, and the FRC fact sheets as well are a great source.
Okay, thank you very much, Amy. I think the key point of that is make sure that you read the original documents, because that's the definitive view as well. We will be providing each of the bodies, both SORP and the individual bodies here, will be producing guidance too. I can't stress enough that if you have a minute to sign up for either to receive blog posts or future newsletters from any of the 3 charity regulators on the call, I would really encourage you to do that too. And I know that from the work that I've done with Laura already in Scotland, that the regulators would be keen to work with stakeholder groups to help explain and to help provide more information to groups and to charities and how this will impact them and what they need to do to prepare. So if you're an organisation based in Scotland, please feel free to contact Oscar, and likewise for the Northern Ireland, England or Wales.
John, could I just come back in? Sorry, just a final point on that. So, you talk there about, education materials. So I know the regulators, and in particular, Commission England and Wales, which is my organisation, we will be producing, updated guidance. So the CC 15D, which is the charity reporting and accounting guidance, that will be updated, and we will look to update our trustees' annual report guidance. And I believe, associated materials across the jurisdictions, will be updated accordingly with the regulators.
And I think, so thanks, Amy. And I think that I'm only, certainly in our perspective, that'll take place over the coming weeks and months as we go through that more systematically. Now that we have the definitive, which is the SORP, which we recommend that you all read now. Okay, that is 12:59, and so we're due to finish at 1. So just to say at the end, there have been an enormous amount of questions put in the Q&A over the last few minutes in particular. What we're going to do is we'll take each of these questions away as a group, and we will attempt to find as many answers as we possibly can, which we'll email out to everyone in the coming days and weeks, so that so everyone has the benefit of seeing the answers to as many of these questions as we possibly can. We'll also include slides and a copy of the video of the presentation for people to view later. I saw one question about CPD. I'm not sure we've got accredited CPD points for this, but there'll be an email confirmation that you can share with with the body that does your CPD if you're so inclined. All that remains for me to do then is to thank everyone for coming and spending their time with us today. I want to particularly thank Roseanne Broadley, Deirdre Dwyer, Gillian MacDonald, who have been working in the background to put all the technical and structural things in place to make sure that we're ready to present. And once again to thank our 4 presenters, Rossa Keelan from the Charity Commission for Northern Ireland, Laura Anderson from the Scottish Charity Regulator, Amy Woods from the Charity Commission for England and Wales, and Stephen Maloney from the Financial Reporting Council for sharing their time with us today and their expertise. Thank you very much for joining us, and I look forward to speaking with you all again soon. Thank you. Goodbye.